Welcome back to Closing Bell. Consumer prices rising slightly faster than expected in September, keeping inflation firmly in the spotlight for policymakers. Joining me now to discuss how the Fed may interpret today's CPI report, Ed Yardeni. He's the president of Yardeni Research. Welcome back. I guess first and foremost, does today stay consistent with your thesis, or does it upset it because you've been more bullish than most?
Yeah, I'm not changing anything. I think the Federal Reserve is done raising interest rates, even though the inflation rate was somewhat hotter in the numbers that came out today. A lot of this problem is actually rent. You take out rent out of the CPI, take out rent, shelter, which includes rent. The CPI, both headline and core, are up only 2.0%. So excluding shelter, we're actually at the Fed's target already. And shelter inflation, we know, is going to be coming down. I know we can all look more closely at the CPI and find areas where there's going to be some reversals, like in health insurance. But I think the Fed has to look at the overall number, and the overall number suggests to me that inflation's turned out to be actually transitory instead of persistent, and I don't even think it's very sticky. So I think Fed officials are looking at what's going on in the bond market and concluding that the bond market's done all the heavy lifting for them, and they don't really have to raise interest rates anymore.
I mean, shelter, though, Ed, is a critical component of where inflation was and why it's been so difficult in getting it down. It's also key on the Fed's mind. I feel like you don't feel like you're being too dismissive of what, for many, is a critical component in this whole conversation?
Well, Scott, you could accuse me of doing what economists tend to do. They always take out the numbers that don't support their story and then say, see, I told you so.
You said it, not me.
Yeah, no, you're making a good point.
You know what, Ed? Forgive me for interrupting you, but there's Caroline Ellison. She's leaving the courthouse right now, getting into that SUV.
Caroline? Any comment?
Well, she's leaving the courthouse, as you see. Wanted to listen in for a second, see if she would answer any of those questions shouted by the reporters who are on site, including our own Kate Rooney, after 3 days of pretty damning and explosive, if not shocking, testimony against her former boyfriend and the head of FTX, Sam Bankman-Fried. So we'll keep our eyes peeled there, see if anything else happens at the courthouse, and go back to Kate as needed. But Ed, I'll come back to you. As I was saying, you know, you're sticking to your bullish case. Yep. You don't think that the CPI nor PPI, for that matter, yesterday upsets it in any way? It just underscores the fact that inflation's coming down, but it's coming down slowly, and the bond market is still reflecting an environment in which, you know, higher for longer seems to be the play.
Well, you're right about all these concerns. I looked at the PPI, and I particularly focused on personal consumption expenditures PPI. There's actually data like that for goods and services. And again, it does not include rent. And it was up 2.7% on a year-over-year basis. Back to the point about shelter, as you said, shelter reflects what happened yesterday. It's not reflecting what's happening today. There's, for example, a Zillow index, which shows that inflation is actually running in the rent category at 3.2%. And this is through September, whereas in the CPI, it's running at 7.4%. So the Zillow index tends to be a leading indicator for the shelter. And I think we're going to see over the next several months that the rent component of the CPI comes down pretty dramatically and helps to bring the inflation rate closer to where it is without shelter, which is under 3% and pretty close to 2%.
Okay, that's one part of the picture, no doubt.
Sure.
Earnings season, right, gets underway tomorrow morning. What are your expectations here?
Well, I think that we did see a bottom in earnings during the second quarter. I think we're seeing a recovery in the third quarter. We had a very modest earnings recession, and it wasn't because of the economy going down. It wasn't because of revenues going down. Revenues kept going up. What really came down is the profit margin because companies got squeezed. But somehow or other, companies are starting to figure out ways to make their profit margin go up. The analyst consensus expectations are showing that. So I think we're going to get a very good earnings season, and I think that'll help set us up for a year-end rally, maybe a November, December Santa Claus rally, year-end rally.